Please confirm on the chat that you can hear me, and if yes, then we will be able to start. All right, so everything is okay with audio and video. I hope we can start. Okay, thanks for coming. I really appreciate that you are here with us. Probably you have your things to do, but you found 1 hour in your life today to attend this webinar, which is good news because you want to learn how to trade, and you will learn how to trade. It's our which is sixth webinar, right? Sixth altogether, and you can see that with every webinar you're getting more and more knowledge, more experience, and hopefully it will turn into the better results on the market soon. For those who are new here, who are if it's your first webinar, I need to introduce myself again. So my name is Tomasz Wiśniewski. I'm a professional trader with 10 years of experience. I focus on price action, on swing trading. I was trading on stocks, on forex market. I'm teaching how to trade also on webinars, seminars across the globe, from Mexico to Philippines. I visited many countries giving seminars. And yes, guys, this webinar is recorded. Previous webinars were recorded too. If you missed one of the webinars, please contact our support. Please contact our company and ask for the recordings of those webinars. It's on YouTube. Yes. Okay, my friends, we can start. Today we will talk about psychology and money management. In my opinion, psychology is the most important factor in trading. It's not systems, not strategies, not indicators. It is pure trading psychology. If you want to, I firmly believe that if you want to be a successful trader, you need to focus on your mind. You need to focus on developing the trader's mind. And I will explain you in the next 40 minutes, in the next 1 hour, why I think like this. And I hope that you will understand that that it's truth. And from now on, from today, let's say, you will also focus on the trading psychology. Guys, who of you already started trading on a real account? Please write on the chat if you are already trading on a real account. Okay, we have some traders trading on a real account. Can you tell me, is the performance on the demo account different than on the real account? Is real account harder, more difficult, or the demo account is more difficult? Harder. So you can, as you can see, demo is easier. For those traders who are not trading on a real account yet, you can see on the chat that guys are saying that trading on a real account is different, it's harder, it's more difficult. But why is it happening? Why is it more difficult? If quotes are the same, you have the same quotes. Euro-dollar on the demo account costs the same as euro-dollar on the real account. Factors which are affecting the price of the asset are the same too, because it's the same market. It's just on different servers. It's the same market. So when the coronavirus hit, demo and real market are affected. You have one platform, the same platform. You are apparently using the same orders, and apparently you are using the same system. So why on earth results are different? That's a rhetorical question, and you already answered it on the chat. Thank you very much. Because it's real money, because of the loss of the capital, because the trading psychology in general, it's about the trading psychology. It's about the power of your mind. That's why trading on a real account is different than trading on a demo account. It is because of the fact that you are investing real money, and this affects your trading decisions. Even if you're trading with $100, it's different because your mind forces you to trade differently, forces you to use different orders than you would use in a demo account, forces you to close position earlier, forces you to open a position which you wouldn't normally open. Okay, because you want to, for example, you lost some money, you lost $100 and you're opening another position because you want to cover this loss. In demo account, it wouldn't happen because you wouldn't be bothered about covering loss because it's a demo money. So you can see that those emotions which emerge on the real account are causing worse results. You start to feel scared or, and sometimes both, excited, right? You feel also other emotions. And trading really should be emotionless. You shouldn't feel any emotions during trading, or positive or negative. Okay? When emotions are muted, like on a demo account, you have much better results. My friends, as I said, I did many seminars across the globe, like hundreds of them, and I met thousands of traders. Really, I was in Africa, Dubai, Philippines, Malaysia, Vietnam, Turkey, all those countries. And I spoke with thousands of traders, and really all the traders all over the world make the same mistakes. It doesn't matter where you were born, in which city, which language you speak, which God you believe in, you make the same mistakes as everyone else. This is really not rocket science, guys. There are four main mistakes. I would say that the Pareto rule is here. So those, let's say, 20% of the mistakes cover 80% of the population. Okay, so I have just four main mistakes covered here. There are more, but those four mistakes cause 80% of the problems in 80% of the population of the traders. And the first one is trading without a proper signal, just for fun, just to feel it, just to be a trader, to cover the loss from the previous trade. So traders open sometimes positions without a signal. So what is signal? Well, you have your strategy. Like we are trying to teach you our strategy, our approach. Mitun was showing yesterday candlestick formations. You have hammers, engulfings, etc. So you have hammer bouncing from the support. You have also fundamental news that I was telling you before. And based on this, you should trade. But sometimes you don't have this formation and you trade anyway because of those reasons, like you want to cover a loss, you are bored, just want to be a trader, and you open a position. And when you open a position like this, it's gonna be most probably a loss because you're not going into the probabilities. You are just trading without considering the probabilities of the price to go up or down. Okay, that's just an example. Another is too big position. This is very common. Traders lose a lot of money because their positions are too big because they want to get rich quick. You want to very rapidly to make your money. That's why you open big positions on the market, which is terrible mistake because you not always win. Like my trades are 50% of losses. Yes, 50% of losses. I'm still making money on this market, month over month, quarter over quarter, year over year, because I have great money management. So if I lose money, I lose a little. If I win a lot. So I allow myself to make mistakes. If you're not allowing yourself to make mistakes by having a too big position, because your one loss will take away like 20% of your capital, this is a huge mistake. And one loss of 20% can kill you, can create mood swings, and in consequence can create the chain of really, really bad trading decisions. I'm sorry. No B plan. What is B plan? A plan is win. Okay, you open a position. Most of you, when you open a position, you think about winning money. You think about gaining profits, which is normal, right? You don't open a position and you don't want to lose straight away. But the thing is that you should think about potential losses. When you open a position, most probably you're very confident that the price will go up or down, that the price will go in your direction. Fair enough. I wish you all the best with this, but you need to protect yourself from the situation if the price will go the other way. And you protect yourself by using stop loss orders, right? So you always need a B plan. You always need a B plan in case your analysis is not the best analysis in the world, which may happen, right? To be honest with you, we are not the best traders in the world. Even when you have profits, you are not the best trader in the world. And you have to allow yourself to make mistakes. Sometimes you can make mistake, and what will happen? If you have a stop loss order, nothing will happen. Stop loss order will be triggered and your position will be closed. Okay, fair enough. You will lose 1 or 2% of your capital. But if you will not have a stop loss order and the price will go the other way, and you will not close it because you will hope that the price will eventually bring you profits, but the trade is giving you more and more losses every day. Eventually, this trade, which is not protected with the stop loss order, will wipe out your account clean. Okay, so you also need to have a B plan. Overconfidence. Sometimes after a few good trades, you think that you're the best trader in the world, and this creates more more mistakes. If you're overconfident, you don't use stop loss order. Okay, so if you're, I'm sorry, let me do this. If you're overconfident, you don't use stop loss order because you think that you cannot lose because you're such a good trader, or you open to big position because you think like I'm winning all the time. So if I'm winning $1,000 on each trade, I will double up my position and I will win $2,000. Brilliant idea, guys. And also it creates a situation when you're trading without a proper signal because you have 5 good trades and you think like, yeah, okay, I'm gonna have a sixth great trade. I'm lucky. I don't need a proper signal in order to trade. My friend, how do you know where to set your stop loss order? This is why we are here on this webinar. I will show you this later. Okay, how should I approach trading? Well, first things first, my friends. You need to set your targets. You need to know your targets. I don't like this word target. Everybody's talking about targets in your life, etc., blah, blah, blah. But okay, in reality, in trading, you need to have targets. First target should not be winning millions of dollars and driving Lamborghini after 1 week of trading, but your first target should be staying above the water. What does it mean to stay above the water? You have water level. In ocean, you have fish. And above the ocean, you have birds. Your ocean level is $10,000, let's say, 10K. You start in this. Your aim should not be doing this with your capital. Your aim should be doing this. Once you can stay above the water for the period of, let's say, 3 months, that's great. It's very promising. You can be a really great trader in the future. That's your aim, not this. Okay? My target is being right. That's not a good target. I'm sorry if I can say this, because you cannot be right every time. I'm sorry. You cannot be right every time, because this market is so, at some point, unpredictable. And I mean, because, for example, Donald Trump can say something on deadly virus can hit the global markets, right? So pretty much there are events which are unpredictable. So you cannot be right every time. What you guys should focus on is to be a good trader. You all should focus on being great traders. This helped me. My main focus was to be a good trader, is to follow good trading principles. If you do this, profits will follow. Okay, profits will follow. And a good trading principle is not to be right every time. The major good trading principle is to earn a lot of money if you're right and lose a little money if you're wrong. That's main trading principle. All right. What about Iran? Guys, I did a training seminar for Iran people, for Persians in Turkey. I don't know what about coming to Iran. I would love to. I would love to visit Tehran and other places because I was reading books about Iran. And I think that Polish people and people from Iran have this nice history of contacts, let's say. I think we like each other a lot. I would love to visit Iran. Just on a side note. My friends, what is drawdown? What is DD? I'm sorry, that's drawdown. Let me explain you this. No worries, no worries, no worries. Is it really good to use stop loss as a scalper? Let me tell you a story. My brother, let me tell you a story. Um, everybody wants to be a scalper when it is going good. So you're buying here, closing your position here, and 1 minute, beautiful. You're selling, the price is going down, you're closing, you make profit. Then it's really nice, okay? But then you open a trade, that's a bearish trade. You sell here, sell, and you think about like, I'm gonna open this position for 1 minute. This is your target. The price goes here and goes like this. And then you think, oh, okay, eventually the price will go to my target. You don't have a stop loss order because you're so confident. The price goes like this and like this and never reaches the target. And here the price wipes out your account because you don't have a stop loss order. Okay? That's the problem. You always need a stop loss order. Always, always, always. Always, even if you're scalping. Okay. So that's the first target, to be above the water. Later, you should focus on optimization of your strategy. Drop the drawdown to the lowest levels possible and make good risk to reward ratios. What is a drawdown? Drawdown is like a maximum loss on your account. I'm sorry. I hope it's not coronavirus. Okay. What is drawdown? So when you go like this, you make 20% from the zero, and then you lost everything. The drawdown is from here to here. It's 20%. Here, here. What do you want to do in your system is to minimize this, that you don't have big drawdowns. You want your equity line to look like this, not like this. Okay? because those times with big drawdown can be devastating for your psychology, for your mind. Okay, do not focus on winnings, focus on not losing. But don't get me wrong, you shouldn't avoid losses at all costs. You should just make sure that every single trade that you're opening is a nice trade in line with your trading strategy. Okay? So don't be panically afraid of losing money. It's not about this. But make sure that every trade is the best trade in the world. Professional traders then focus. I didn't explain here. Good risk to reward ratio. What's that? Good risk to reward ratio. It means that when you are gaining money, when you are on profit, when you have a good trade, okay, from the other side. It means that when you have a stop loss order, you are aiming to lose X amount of money. Usually X amount of money should be 2% of your capital. That's a loss. If you make profits, profit should be around 3 times X, which should be from 3 to 6% of your account. This is risk to reward ratio. Your reward should be much bigger than the risk. That's why when I have a ratio of 50 to 50%, not the risk to reward ratio, but profitable trades to losing trades, every other trade that I make is a loss. But it looks like this. I lost 1%, then I gain 2, then I lose 1% again, then I gain 1, then I lose 1, I gain 3, then I lose 1, I gain 4, I lose 1, I gain 1. Okay? That's how trading can bring money. All right. Professional traders, they focus on cutting the losses, but the amount of losses, not the number of losses, okay? So they are not focusing on on cutting the 20 losses, but they are focusing on one single loss, not to make it too big. Beginners, they focus on profits, okay? That's the difference. Professionals, they don't want to lose much money, a lot of money, but beginners want to earn a lot of money. That's the different focus. 1000% profits are obviously possible, but they are not probable. Okay, if you earn 2% per month, you are still a winner and make an awesome return on a yearly basis. But Forex traders are not satisfied with 2% of profit. But it's an excellent result, 2% per month. Come on, guys, this is a great score. You need to understand that your mind is the most important thing, not strategies. Professional traders, they focus on removing the risk from investments. On the other hand, beginners, they look for risk. They want to feel this risk. They are looking for emotions, risky trades, etc. But the problem is that risk presence disturbs the decisions making process. So when the risk is present in your trading, it affects your mind. And what is the key in trading is the percentage of the capital that you risk per one trade. It should be 1 to 2%. I don't allow myself to lose more than 1% on the trade, on one trade. Now compare it to your trading on demo on real account. You are probably risking much more than me, much more than 1% of your capital, which is a mistake because then you have a loss and then you cannot handle this loss. What is the minimum amount that we can start trading with Axiori? Thank you for this question. This is you can start from as little as $100. Why is it important? I'm sorry. Why is it important? Because it allows everyone to start and feel how this market works. it is essential for you to start feeling this market with real money. And Axiori allows to do this from $100 only. So you can start your learning process much faster. Like other brokers, they allow you to start with, let's say, $1,000. So you wait for this one to collect this $1,000 and then you start trading. So you're wasting a lot of time. You're wasting a lot of time on a demo account. In reality, you should be already practicing on a real account with small amount of money, because that's how you practice your trader's mind and trader's psychology. If the loss, as I said, I allow myself 1% of the loss. If the loss is too big, then when you lose, you try again, you try to cover this loss, to make up for this loss. Then you try to convince yourself that you can do it, that you know how to trade, that you have knowledge, and then you try to make millions in one trade. Okay? But you forget one thing, or you didn't know this. Now you know, because you are on the seminar, that trading means eating with a small spoon. You lose 1%, you gain 2. You lose 1, you gain 3. And slowly, 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 you're building this equity line. How about losing 1% to gain 5%? Even better, my friend. How about losing 1% to gain 10%? Also nice, right? It's The thing is that once you are limiting your losses to 1% or 2%, then gains should be unlimited. You can leave it as it is, you can leave it for 5, 10%, okay? Once you're gonna catch the trend, you can squeeze it like a lemon. You never know if you're immune to risk if you trade on a demo account. That's what I'm trying to tell you all the time. Demo is fantastic tool. It's a great tool for developing your strategy. But as long as your mind is the key, you're just wasting your time. Again, about the demo account, guys, we are talking about this all the time. But all of you who are here, over 100 people, should have demo account already. You should be practicing this knowledge that you're getting right now. There is no reason to wait for something, because you will forget what you learned here. So everybody should be practicing on a demo account what you learned here today and on the previous webinars. Okay, so go on the axiori.com website and download demo and open demo account and start trading with demo account. But then after developing your strategy, after finding out how the platform works, then you need to taste the real market, and you do this on a real account, because on a demo account your emotions are muted. You are not working on your emotions, and it's completely different story on a real account, and you will find out yourself. And again, in Axiori you can trade on a real account from only $100, so the price is really low for this live experience. Even the best trading system will lose money if it won't be used properly, if your mind will mess with this great trading system. Okay, that's why you need to make sure that your mind works. You have a tool in your hand, which is a system, but it depends how you will use it. It depends from your mind. All right? Your ego is not your amigo. Guys, your ego can be a huge problem. What market will do is market will teach you humbleness. Market will force you to admit and recognize your mistakes. And if you're smart, and I believe that you are smart because you are here with us on this webinar, so you are smart because you want to learn. If you're smart, you will learn from those mistakes and you will never make them again. You will never do those mistakes again. But people very often make the same mistakes over and over again, and they don't learn, and they are wondering what is going on, why am I not profitable? Well, because you're not learning from your mistakes, because you're not recognizing your mistakes. That's important. Many traders, guys, many traders, when they make a mistake, they blame something else. So, for example, you had a trade here, long position, you were doing good, you didn't have a stop loss order, and then Donald Trump says, I'm gonna do something, put tariffs on your country, and then the price goes down. Who do you blame? And you are losing everything. Who will you blame? Obviously, you will blame Donald Trump. You will not blame yourself. Who should be? Yes, Donald Duck. Who should be blamed? You should be blamed. Because if you had a stop loss order here, nothing could happen. You would lose 1%. But then you don't have a stop loss order and you're losing 10%. And then you are a damn new president of the United States. How could you do this to me? Why you betrayed me like this? Okay? But in reality, it's your mistake. If you will consider this as your mistake, you will learn from this and you will always use a stop loss order. All right. Analyzing your experience. Again, demo is a great tool, but the longer you stay on demo, actually the worse you get. In my opinion, you can trade on a demo account 1 month, 2 months. After this, you need to taste the real market. If you will forever stay on a demo account and you will be waiting, like, oh, it's not the best time to trade on the real account. It's not the best time. I need to learn more. I need to learn more. But what do you want to learn? How many strategies do you want to learn? How many patterns do you want to find out? How many indicators do you want to know? Okay? If 80% of the success is trading psychology, then staying on a demo account gives you nothing. On a demo account, you learn 20% of the success. It doesn't take so much to learn it. Okay? So you need to go to the real account. Yes, but not with big deposits. Don't go crazy. Start small with $100. Money and risk management. You are asking about the stop loss orders, where to put them, blah, blah, blah. Now it's time to explain this because it's super important. By the way, euro dollar is now breaking crucial support, as I see on my second screen. I posted this on the Twitter, this video analysis half an hour ago, I think, that there's a nice support and it will be broken. We'll have a nice breakout. We'll have a nice downswing, and we do have nice downswing. And actually, I'm having a position on it right now, which is quite profitable. Money and risk management. Which pair? Euro dollar. Euro to American dollar. Money and risk management, my friends. Two most important issues. Risk management, yes, and diversification. In reality, money management is super easy, but not many people want to do it properly. The thing is that the lower capital you have, so you have like $1,000, you try to be a millionaire very quick. So you take a huge risk, which is a mistake, okay? That's stupid, but it's true. The lower capital you have, you are taking bigger risk because you want to get rich quicker. It shouldn't be like this. Tips for someone who doesn't know what Forex is all about. First tip, go to our YouTube channel and watch our previous 5 webinars. Then focus on this one, and then you will start knowing what it's all about. Second tip is attend our next 3 webinars next week. That tips I have, because in those webinars you have hundreds of tips. What is this, my friend? This is a screenshot from my stock trading platform, actually from my statement from this morning. I told you a few times that I have a small portfolio Small portfolio because stocks are on all-time highs right now, and I don't feel confident in trading on all-time highs. I would prefer to buy after recession, but I did this just maybe not for fun, but I saw nice setups, and I didn't want my money to stay without any action. I didn't want to keep it on a bank account. So I created this portfolio of 7 companies from the Polish stock exchange. Why I'm showing you this is not to brag about the results, but to show you diversification, because it's one of the methods of money and risk management. PLN to USD. So to USD. So 1 USD equals 4 PLN. Let's say 380, 390. Okay, diversification. So I created portfolio not from one company, but from 7 different companies from different sectors. So when you trade on stocks, you don't buy one bank and keep all money in one bank or one car maker. You don't put all your money in Tesla. You don't put all your money in Facebook. You take few different companies from different sectors. So you buy a car maker, you buy something from funk stocks, modern technologies, you buy a bank, for example, financial sector, telecom or something, and from this you create a portfolio. Let me show you on this example. Arctic, they make paper. Euco, they are like insurance company. KGL, they produce packages. Max Polska, they are owners of restaurants. Rokita, they are the chemical company. Stal Profi, they are producing steel. And Vielton, this is one of the biggest European companies or maybe worldwide companies which is producing how do you call it? Help me, I forgot the English word. You have a truck, and truck is carrying this. What's that? I forgot the name in it. Trailer. Thank you very much. Trailers, carts. Yes, they produce this. Trailers and carts. One of the biggest companies that produce it in the world. So you can see companies from different sectors, but also you see that this portfolio is not equal. So 7 companies, I put money not equally. In those that I felt that the setup is the greatest, I put 5,000. So I put 5,000 here, 5,000 here, and 5,000 here. And look, surprisingly, in those that I felt the most confident, they are on profit, 9%, 28, and 12. In the companies that I felt less confident, I put 3 and 2 and 2 and 2. All right? And that where is 3 is profitable, that where 2 is profitable, and those where I wasn't so confident with are on minus. You see, this is proper diversification. So even that this one is -7 and this one is -6, the real loss is very small because it's a small percentage of my portfolio. Okay, this is diversification. How to do this, guys, on the forex market? You don't go with Euro USD, American dollar to Japanese yen, and American dollar USD to Canadian dollar, because then you have too big exposition on American dollar. You should diversificate your portfolio. So let's say Euro dollar, then British pound to Japanese yen, Then let's say Australian dollar to Swiss franc. And then it's a real diversification. Also, you don't put 90% of your money here and 5 here and 5 here. No, you put 30 here, 40 here, and 30 here. That's proper diversification. Yes, some of those instruments are correlated. So, for example, if you trade on American dollar on euro dollar and gold, those are correlated. Depends from the correlation, but you need to check the correlation matrix also. Money management rules, guys. When you open a position, you should always have two plans: A for the win and B for the loss, for the failure. You need to know when to exit the position before you will open this position. When the position is open, do not decide where or if I should open stop loss order. It should be before. Because when you open a position and you think like, oh, I'm gonna put stop loss later, you will not, because your mind will kick your ass. Okay, you cannot risk more than on one trade than 2%. I usually lose one, not two even. Remember that trade which looks like a sure bet, which looks like an obvious win, which looks like an easy profit, does not look like this in reality. It looks like this for you only. Market does not care about your opinion. Market does not care about you. For the market, you could not exist. I could not exist. Market does not care about me, about my decisions. Market is so big that does not care about retail traders, small money. Okay? So don't think that market is against you or something. No, market does not care about us. Remember that in market there's a random distribution of winning and losing trades, no matter of your trading edges. This is crucial. Let me show you my platform now. Let's work a bit on the stop loss orders. Wait. Do you see my screen, my friends? Do you see my platform? Yes. Beautiful. So this is this euro dollar, and as I told you, I have a trade here. This is a short position here, which I opened. Why I opened this position? You can see from here. I'm mentioning this in the video. There was super important support on the euro dollar. Euro dollar defended this support here and here and here and here today. The bounce from the support wasn't convincing, and eventually the price broke it. So I was seeing that this bounce is not convincing, so most probably the price will go down. I opened two lots, but look, my friends, how big is my potential loss? Minus 350 euros. 350 euros. What is my balance on my account? Almost 90,000 euros. Now 90,000 euros. So if I risk 1%, I could allow myself to lose 900 euros on one trade. 900 euros on one trade. But I'm allowing myself in this trade to lose 350. That's around 0.4%, 0.3, 0.4%. Not 1%, 0.4. If I'm such a good trader and I have a long run of profitable months and weeks and years, I should trade 1%, right? Yes, but I'm not greedy. And for me, it's okay because I want to protect my profits. I'm focusing on not making this number smaller. Profits will come, yes. But what I'm really focusing on is not to make too big losses because I like this money. I don't want to lose it. All right? So even though I could earn more money on it, no, stay humble, stay low, eat with a small spoon. As you can see, probably many beginners would go maximum size like this. Oh, there's a great trade, I'm gonna put all my money on it. No, you have to eat with a small spoon. About the stop loss order, where should be the stop loss order placed? Guys, general rule which will save you a lot of time and money is that stop loss order should be placed in a place where your original thinking about the market movement has no sense. But how does it work? Okay, I explain you this. I placed my stop loss order here above the daily highs because if the price would go down and then come back and then from daily lows would say daily highs, that would mean that this area got rejected and this breakout was unsuccessful. So there is no reason for me to keep this position open and pray to God to bring me profits again. No, it makes no sense. Let it go, close the position because your original thinking about the price going down is not working because the price was down and got rejected. By the way, you attended the webinar with Meeton yesterday. For sure he was talking about the situation like this, that the price goes down and comes back on a support. It creates a Japanese candlestick pattern named what? Who can answer me on the chat? It creates which candle, my friends? Hammer, thank you. It can be doji, yes. Doji is kind of a hammer, but I wanted to see hammer or pin bar or doji. Those names are good. Thank you very much. It means that you're paying attention. No, hammer does not mean uptrend. Hammer means that the price tested lows and at those lows got rejected. So the price is going higher. So that would be, for me, be the signal to close my position. I don't want to fight with the market. I don't want to convince the market that I'm right. No, 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 no. You are not trying to convince the market about anything. Okay? Don't try to convince the market. Just go with it. As you can see, euro dollar is dropping nicely. I like it. Another example from today's analysis. I was talking about the bullish breakout of the American dollar to Canadian dollar. Here, breakout of this resistance, and the price is above the resistance. This resistance is on the support. It's pretty clear. Resistance, support, support, resistance, breakout, resistance, support. If I would open the trade here, where should be my stop loss? Chris says that, whoa man, I have the same analysis. Chris, is because of the great minds think the same. That's why we have the same analysis, man. Okay, my friends, where would you put the stop loss order? Obviously here, below those supports, not this trend line. Why below those supports? Because this long position makes sense only when the price is above the support. If the price would break the support, it would more probably mean that they want to go even lower. So no reason to fight with this market. Just escape from this position. But about also, that was a joke about those great minds, or maybe not. But about the same analysis. Why? What's the reality? because the principles of technical analysis are the same. And why it works? Because most of the traders on the market see those patterns and they trade those patterns. So it's like self-fulfilling prophecy. Even if you don't believe in it, most of the traders do, and they will trade based on those patterns. Even if you don't believe in it, most of the people do, and they will make money on it, and they will trade it, so they will create those movements with their trades. That's the definition of self-fulfilling prophecy, my friends. All right. This is how do you draw supports and resistances? Well, I use the rectangle here, here, here. How do you learn to do this? Guys, it takes time and practice. That's why you need a platform, not only books. You need a platform where you have, I'm sorry, many instruments opened. You do analysis, you look, you look, you look. Your eyes get adjusted to the situation on the markets, and you are learning how to draw resistances and supports. You learn how to do this by practice, my friends. All right, end of screen sharing. Back to the back to the presentation. Oh, guys, it's been 1 hour already, and I have few things more to tell you. Guys, you must be disciplined. Your rules must be strict, and you should always obey those rules. Sometimes you're gonna think about obeying those rules. Don't do this. Don't do this. I know that you think like, okay, I will not do this, but you will do this, and you'll think, oh, what this guy is saying? He's talking stupid things. Maybe I should trade 5% of my capital or 10. Wisniewski does not know what is he talking about. He's talking stupid things. 1%, I'm gonna trade 5. Guys, I cannot forbid you to do this. I'm just telling you how the good practices looks like. If you will follow this, that's awesome. But if not, it's your fault. Weak mind can destroy even the best system, even the best money management program. That's why I'm gonna show you my strategy on the last webinar, not on the first, because you would take my strategy on the first webinar and you would never attend other webinars because you would think like, oh, I have his strategy, I'm gonna make money. No, you need to practice first. Okay, more. This is an example of rules list. That was kind of my list when I still needed it. Now I don't need it because I have it in my head already in the practice. But I had rules list before. I was using this every day, reading it every day before I started trading, and how it looked like. Trend is your friend. You can only open position with the trend, period. You don't fight with it. Use trend corrections to open positions with better prices. I'm sorry. Use candlestick formations, but use them only on important supports and resistance levels. Do not exceed more than 2% loss on capital per one trade, usually one, or even less as I showed you before. Oh, euro dollar is accelerating, guys. Nice movement. Oh, I'm gonna show you one more thing. Screen sharing. Wait, my friends. This is priceless lesson for you. Do you see my screen again? Yes. Guys, very important lesson. What is the potential loss here? 90 pips. Almost 20 pips. Sorry. 20 pips. My ultimate rule is to how to keep emotions out of the game. how to be calm in trading is to protect your money. So when the movement is in my favor for the amount of pips from the stop loss order, I move my stop loss order to the break-even point. What does it mean? It means that when I'm opening short position here, let me change the, this is okay. And the stop loss is here. And the price is here, the same amount of pips. So let's say here is 25 and here is 25. I'm sorry. Why it's not moving? 25. Then I move the stop loss order to the break-even point to protect my order from going into negative. So once it's like this, I remove risk from this investment. I cannot lose money on it right now. So that's what I'm gonna do now. As you can see, 25 pips, 20 pips was the stop loss order. We already made 32. Now we are making 22. So this is risk to reward 1. The reward is the same as risk, right? I can earn 20 pips. I was risking 20 pips. So risk to reward ratio is 1. When it's 1, I remove the risk. So look, now I'm gonna do this live on my live account. I moved my stop loss order into break-even point. Now I can make only profits, $30, 30 euros. What will happen? The price will continue to go down. I'm happy. The price will come back. I'm happy too, because instead of loss, I managed to finish on break-even. What will happen if the price will do this? And this? Well, that's the risk. I'm gonna be slightly sad, but slightly. Why I don't use take profit? That's a good question, and I'm gonna answer it now. I don't use take profit. I very seldom use take profit, like once every 50 trades. Why? Because I am going with the trend, always. So I want to squeeze this trend, this trade as a lemon, because this trade can go forever. If it's with the trend, it can go forever, okay? So I want to squeeze every trade as a lemon. Let's see here where the take profit could be. Probably the good idea to let me check the take profit. Probably a good place to take profit would be those lows from where? From October. Here. Original loss was 350 euros. Profit is potential is 2000 euros. That's a great risk to reward ratio. Originally I was risking 0.4%, let's say, and here I'm allowing myself to earn wait, 900, let's say 25%. Okay, so that's a great risk to reward ratio, but it does not mean that the price will stop there. The price can go there and reverse, but the price can go there and go there. So why limit yourself to 2000 euros if you can earn 5000 euros? The reason why I don't use take profits is because I go with the trend and I want to squeeze the trades as lemons. Once I'm on a good side of the market, I want to make a lot of money. That's why. But I'm gonna leave this take profit here. Why not? Noted. Okay. How do I accept closing trades on break-even? Because sometimes it reverses and goes in my trade. That's life, guys. Acceptance. That's very important, to accept things. Because break-even is a tool which protects you from going into negative where you had money in your hand almost. Like I could close my position right now and take money. Okay? If I wouldn't have a break-even point, and I would keep my stop loss here and the price would reverse, then the pain from this, that you were in profit and you finished on loss, would be much greater than pain of price going there and there. So that's the negative side of going to break-even point, but you just need to accept it as one of the negative aspects of break-evens. It happens from time to time, but break-even helps you much greater than it disturbs you. Let's say like this. Profits are much bigger than pros are better than cons of having break-even point. All right, and sharing. So you witness live risk control, risk management. Guys, 1% of the loss. After three losses, double down the position. Most of the traders, when they had 3 losses, they make positions bigger because they want to cover this loss, which is stupid. You should make positions smaller, because if you had 3 losses in a row, it means that you're not feeling the market right now, or your system is not working in this particular market time. Sometimes market move the other way, and maybe your system is not adjusted to this, so you should double down. Once you come back to the wins, then you can come back to your original size. Once the position is on a green side, so on profit, on risk to reward ratio 1, change stop loss to the break-even point. You just saw this 2 minutes ago live. You just saw this in practice. Use only higher time frames. I'm using only higher time frames, H1, H4, D1, because I do believe that patterns setups on the bigger time frames are more important. Use 4 positions a week maximum, quality over quantity. I had problems with over trading before. I wanted to trade as much as possible, open as many trades as possible. But quality suffers if you go for quantity. You should focus on quality. So if you have 10 setups, pick only 4. Why? Because then you will start big brain time. You will start analyzing those 10 setups, and you will pick only the 4 best ones, which increases the chance that they will be of the highest quality. I pick only 7 companies on my portfolio from 30 great looking setups. So from 30, I picked only 7 best. That decreases the quantity but increases the quality. Guys, quality. You don't have to trade for a week. You probably think that you have to trade every day. No. For great living, you need 1 trade a week or 1 trade a month only. Focus on quality, guys. Quality, quality always. Right? And for example, do not invest on Fridays. I checked my strategy, my stats, my system, and I noticed that I have worse trades on Fridays. What to do? I could modify my system to increase it, or I could not trade on Fridays. What do you think? Which I picked? Which way I picked? Obviously, I abandoned trading on Fridays. I have a longer weekend, which I like. I don't open positions on Fridays. All right? I don't need to feel as a trader or investor on Friday with open position. No. If that is about to increase my strategy and my results, I will not trade on Fridays. Also, from analyzing my stats, I noticed that on pairs with British pound, I have bad results. So British pound to Australian dollar, British pound to Japanese yen, British pound to Swiss franc. So what I did, I didn't fight with it. I just stopped trading on these instruments. Guys, I'm sorry over trading. I'm gonna explain you over trading because it's one of our biggest enemies. As I said, like quality, quantity. Sometimes you feel like you need to trade. You don't have enough confidence in this movement, but you trade anyway, okay? That is a huge mistake. You can do that in a casino, but not on the Forex market. Forex market is not a casino. You have to be disciplined. If you don't see a trade, you don't trade. Simple as this. Just stay away from the market, close the platform, and go do something nice in your life. Don't force yourself to trade. When there is no occasion, then there is no occasion. Guys, sometimes I tend to record a video every day with the best trading occasions. Sometimes I don't record a video, not because I'm laying on the beach doing nothing or playing golf all day. No, it's because I don't see anything on the charts. It's because I have 60 instruments on my platform and I don't see anything interesting. I will not force myself to record something just for the sake of recording. No, I'm gonna record something when I see nice setup. Sometimes there are no setups, no trading. So go home, close the platform, buy flowers to your wife, play with your kids with Lego or with something else. Go biking, golfing, hiking, running, something else, guys. That's it. Because it's already 1 hour, I could talk for the psychology for hours. Guys, if you need help, advice, but not trading advice, not a trading strategy, not a signal. I mean, trading advice like not a position, but general trading advice, ask me on Twitter. Wisniewski FX, this is my Twitter account. I don't have Instagram, I don't have Facebook, I have Twitter. Add me on Twitter, follow my videos, and from this you'll get inspiration for your trading. Also, support at axiori.com. Those guys. Go to those guys. If you want the recordings of this video, recordings of the previous video, you want to ask about the weather, you want to ask about the bus services in Guadalajara, Mexico, about everything. You want to ask about my shoe size, write to support at axiori.com. There's a bunch of guys who are waiting for your contact to help you. They want to help you guys. They have all the tools to help you. You want to know how to open a demo account, how to open a real account, support at axiori.com. All your questions will be answered. Small disclaimer also, we don't give investment advices. Never, never, never. Okay, this is important. My friends, on Monday, next webinar with my colleague Mitun. Wednesday, next webinar with my colleague Mitun. 1 week from now, Thursday, webinar with me, live trading session where we will sum up everything, gather it together into one trading strategy. So next week you attend 3 webinars with us, Monday, Wednesday, Thursday. I see all of you on these webinars. You are very close to finishing the whole cycle. Okay, looking forward to see you next week on all those webinars. Any questions now, my friends? If there are any questions, I will answer them. Thank you for all your kind words. I'm doing my best to teach you in the best way possible. Oh, books about trading psychology. Sure, my friend. Michael Douglas. Trading in the zone. Disciplined trader. My friends, those two books, Trading in the Zone and Disciplined Trader, are the best books about trading psychology in the whole universe. If you are serious traders, read those books. Mark Douglas, Trading in the Zone and The Disciplined Trader. Make sure to read those books. All right. Long story short, we finished. I hope I gave you a lot of practical knowledge. You saw, even I'm super happy that I opened this trade, not because of profits, but you could see the risk control live, how to do this live. All right, my friends, have a good weekend. Some of you start weekend today. Some of you have to wait till Friday. But have a great weekend and we see each other next week. You have to be on the next webinars. Thank you guys. All the best. Keep learning and we see each other soon. Bye.